Thanks for all for coming out this afternoon. Um, I hope that today we can go through some things that we can make this process easy for you. Certainly open to any questions at the end, like Amanda mentioned. And yeah, we're going to do things a little bit differently today, so just please be patient with me. But hopefully we'll be able to touch on all kinds of things, and you'll be able to review them after and or ask any questions that you have. So yeah, so let's get started. So today's webinar, we're probably going to just jump right in with who we serve. We'll talk a little bit about the loans that we offer, going through those financial projection worksheets that can be a little tricky if you haven't seen them before. And then what we're going to do differently this time is we're going to go through our online application process, which is brand new. Hopefully it makes the process a little easier for you. It sure makes it easier for us. And yeah, then questions at the end. So when talking about who we serve, we definitely believe that our communities are stronger when women are full participants in entrepreneurship. So women entrepreneurs are definitely our primary clients, and we serve the early stage businesses, as early as market-ready startups to growth stage businesses. And we also work with partners and stakeholders in that entrepreneur support community at large. So one question we often get asked is, does AWE provide grants? And the answer is we don't. We do provide a lot of other things that obviously we'll go through coming grants. We do have a great page on our website that you can take a look at, and where we try to list what might be available. So you would have to kind of go through there and see what's a fit for your business. And then here's another few options on the slides that you can take a look at. What we do offer, among a lot of things, but what we do offer are loans. So we have repayable loans between $30,000 and $150,000. And as I just mentioned, they're for market-ready startups, or to expand your business, or actually purchase a new business. One thing that we do require is that they're female-owned, meaning at least 50.1% or more owned by women, Alberta-based, and they must meet our requirements for the credit, equity, and security. All of that is available on our website in a lot more detail. And again, a question we're asked a lot, but yes, you must be a permanent resident or a Canadian citizen. So with anything, and I don't know if you've tried applying for loans with the bank or with other support organizations, but there's some things that we can use an AWE loan for and some that we can't. So like I mentioned, you can use it to expand your business or purchase a business. Leasehold improvements, equipment, that's totally great. Operating capital, meaning sometimes we can fund for, say, 3 months worth of salaries or 3 months worth of rent, that type of thing, in order to allow you to get moving on your new project or on your new business. We do fund marketing costs. And another thing the bank, you probably would have noticed that we are able to help purchase inventory, which a lot of the other financial institutions aren't able to help with. Some things that we can't offer a loan for would be to pay yourself, the owner, to pay off existing debt. Like perhaps you've got money owing from BDC or on a credit card or something like that. Unfortunately, we're not able to use the loan to pay that off. We can't pay franchise fees, but however, we often work together with other organizations that can, so we can kind of do a joint loan, and they can fund for the franchise fees and we can fund for, say, building out the space. Um, Speculative ventures or the purchase of land. So this would mean like flipping houses, that kind of thing that we can't like lend money for something that you're speculating and that you're going to turn around and sell later, including the purchase of stocks or shares, some or that type of scenario. Intangible goodwill. So if you're purchasing an existing business, then you're able to, or we're not able to, sometimes there's a piece that says, oh, and for goodwill or the customer list or the book of business. And that's it. There's a value associated with that. We can't fund that, nor can we look at anything that's considered research and development. And again, I can direct you towards organizations that definitely are in a space where they can help with that research and development phase. So one of the things that we find trips people up when they're trying to prepare their loan application is the financial projections. So we do require that you project forward 2 years by month as what you think your income and expenses are going to be as you head into this new project, whether that's a brand new business or whether that's an expansion. So today we're hoping to walk you through our spreadsheet that we have and sort of just make it a little bit easier for you. So one thing we're thinking about when it comes to this cash flow financial projection is the funds going in and out of your business. That's what cash flow is. So think of it this way. Cash flow is like the ins and outs in your bank account, right? You know that you have a job, say, for example, that you're going to get paid so much every 2 weeks. However, um, it's for the period 2 weeks prior. And so you don't get the money in your account until payday, right? Or if you invoice a customer today, you know they probably have 30 days to pay it, right? So in this month, you may be thinking, oh, yes, I made a profit because I invoiced X and spent less. However, you're not actually going to get that money cash into your bank account until that 30 days. So that is something that we have to take into consideration when we're looking at the financing and the loan payments and so on. That yes, you've received the work and you've invoiced for it, but do you have the money in your bank account to make the payments? That'll become a little more clear as we go through the spreadsheet. So this spreadsheet, like I mentioned, is on our website. There's a few pages to it, and we'll just kind of walk through one by one. I've set a lot of formulas and calculations in the spreadsheet so that it makes it a lot easier and a lot more user-friendly for you as you go through. So if you don't type over the formulas, it can really be helpful. If you do type over the formulas, then you're going to have to kind of do a lot of the transferring from page to page to page manually. So this is our first page. It's called Source and Use of Funds. And just think of it as in the source of funds is your personal contribution, how much you're looking for from AWE. Perhaps there's other lenders involved, and that's where the money is going to be coming from. The use is breaking down, okay, what do you want to use the money for? So as we mentioned, there's certain things that we can fund, certain things we can't. So it's important to break those all out and see. We're also looking at what your personal contribution is too, and perhaps this might include what you've already spent money on in the process before you decided to come for some financing, and you can include all that in your personal contribution. So in this particular example, you can see that they are building out a space. It's like this company that I've used as an example was a beauty salon. So she had a small place and she decided she was going to move into a bigger place. And so she was looking for funds to build out the bigger place. So she showed that she needs $95,000 from AWE towards construction, which is leasehold improvements, and her new sign. She's already put money into accounting and advertising, into her first month's rent and damage deposit, and she's included that all there in her personal contribution column. And then including in equipment, she's included 10,000 in furniture and fixtures, which we can totally help out with. So in the end, her sort of her total project is going to be $150,000, of which she's putting in 45, and she's asking for that loan of 105, which you can see all tallies up at the bottom there. One area that people get a little stumped on is that working capital number. You can see there below the cash line, and that's sort of the amount of money that you're putting in to like the actual cash money that you're putting in to keep things afloat and pay your bills and so on until your sales start coming in. So she's included 14.4 in working capital and included that as a personal contribution. If you're looking for that to be included in the loan, you would have to show it in a little bit more detail, as in I'm looking for working capital to pay my employee wages for 3 months, or I want to pay my first 3 months rent, or that kind of thing. And that's considered working capital as well. So in the end, you can see that all the sources, all the sources in those three middle columns add up to the total costs and the total funds on either side of that page. Okay, so here's year one of the cash flow projections, or financial projections, we sometimes call them. And you can see in the opening position column, this is the opening position the day that you start the project. And a lot of these numbers transfer directly over with formulas from your source and use page. You can see there, she has said that she's going to put 45 in herself and 100, she's looking for 105 loan proceeds, which added up to her 150. And then you can see, she just told us she wanted 95 for leasehold improvements, remember, and she wanted these various different costs, which add up to everything that she's purchasing and everything that AWE would purchase with the loan. And you can see she's added up to the total cash paid out, and the closing cash balance is the 14.4 that we looked at on the previous page. So when it comes to the monthly breakdown, and I know if it's a new venture or a new project, you're not exactly sure what your sales are going to be or what your expenses are going to be. Sometimes think of this as a sort of like a household budget. You kind of know roughly what your rent is going to be or your mortgage payment. You know what your utilities are approximately. Just kind of go through and figure out what those are for your actual business. And then you can work backwards and say, okay, well then how much money do I need to make to cover those and be in the cash flow positive every month? You can look at what is my capacity, right? Like how many clients can I actually see in a day and how much do I get per customer? Or, I know with restaurants, they're like, how many seatings do I have per day? And what's the average spend per customer? Products, how many do I have available? How much capacity do I have to manufacture those products? And that can really give you some really good sort of, and it's really great to think that through, is how much can I actually maximum sell, and then work back and say, okay, well, obviously in the beginning, I won't be at my max, and maybe the business is seasonal. So I have to think about that maybe I'm busier in the summer or slower in the winter, or maybe I'm really busy at Christmas, but not in the summer. So these are some things to kind of give some thought to and be realistic about. So when we talk about cash flow, we're thinking, okay, well, I know I have a really, really, really busy season, but then it gets really slow. So in the beauty business, she's kind of identified that she's busy around graduation time, um, around wedding season, and then she's also busy coming up to Christmas and New Year. But then it's going to be quite quiet then, usually sort of in that January to February time. But if she's done good planning, she knows that she's going to save some of that money that she made during her busy season and put it aside to help pay the bills in her quiet season. So, for example, here she's included that she gets her sales from services. She's selling a little bit of retail product, And she's decided that until her business grows, she's going to rent that extra room out in the salon for someone to do maybe some kind of similar or a little bit different beauty services. And then that will help her pay her rent while she's getting going. And then when her business grows, she can kind of take back that room and use it to generate her own service revenue. So again, you can really break that down so that you can see, well, where are all the places that I'm getting my revenue from? She's included then her monthly advertising budget, her like accounting budget, maybe for the bookkeeper. She's going to have employee wages, that kind of thing. So again, just kind of breaking it down and seeing what your cash out is going to be and what your cash in is going to be. In this particular case, she's got 14,000 working capital that she's got set aside, and she made a small profit or is cash flow increase that month. So and you can see at the very bottom at the 14,400, and then her little bit of profit that she made, it comes out now she's got 15,769 in the think about in the bank. Okay. And then as she goes through, there's some months, for example, month 4, where she maybe ran at a little bit of a loss. Maybe this is her little slower time, but so she can see her closing cash balance has gone down under the 14,400, but that's okay because she had that little bit of money set aside and she's still got money in the bank. So that's just the process of going months 1 to 12 each month. Um, Obviously, we know that you don't know exactly what your sales are going to be, but just it's a good educated guess, and nobody knows your business better than you do. So we just kind of want to see that, you know, what you're thinking so that we can kind of move forward and help you with that. So then we'll just go to year 2. And in year 2, you're thinking about things, very similar. What are my sales? What are my expenses? But maybe I want to hire another employee. Maybe I want to take over that extra space that I was renting out and create more sales from it. Perhaps I want to take on new services or new products, this kind of thing. So that's what you're thinking about for year 2. And you're kind of working through it to see, well, will I be able to afford that, do I think? Um, a lot of people say, well, when do I know that I can afford to hire somebody? And this is the really very, very best way to kind of work that through, is that, and in real life, you'll like already have maybe a few months or a few years cash flow history. So you can see, oh, okay, well, I see that I'm pretty much cash flow positive every month. So if I were to hire somebody and this, figure out how much their wage would be, yeah, I could still afford that and still have money to pay my bills. So, this is definitely something to think about as you go through. Now, one thing I will mention though is your opening position, because we're not opening anymore, I've got that grayed out. So you're not really putting anything in there. The only thing that you've got opening is your cash balance from last year. And that's going to carry through up and down, like you can see through year number 2 as you go through making money in each month, or maybe not making money in the month. You've still got that closing cash balance in your so-called bank account at the end of each month. So we can go to the next step. Now this is your income statement. So this is what this is doing. This is actually your profit and loss statement. So this is showing at the end of a certain period, whether that's the month or the year. And this one is actually showing um, the year ended year 1 and year ended year 2. What did I sell for the month? What did I spend for the month? Or sorry, what did I sell for the year? What did I spend for the year? And what was my actual profit that I made at the end of the year? Not what's in my bank account, but if I look at all my invoices, all my sales, and then I take away all my expenses, how much money did my business actually make and in profit? And this is sort of what you would end up declaring to the government, right? So in this particular case, she didn't do too bad. I mean, she had a profit of just under 4,000, which is, sometimes new businesses don't even make a profit in the first year. But then you can see in year two, she's predicted that her sales have gone up. Her expenses are going to be roughly the same. Maybe her salaries will go up a little bit because she's getting more sales. And she ended up with a profit of just under 30,000. And that's just what we're looking for. Again, the areas that are there in white should pull through from your cash flow projection spreadsheets. The areas in yellow would be those things that your accountant would make entries for at the end of the year. One thing you might know is what your cost of goods sold is. So the cost of goods sold might be, if you're in a product-based business, what does it cost me to buy the goods, the inventory, how much is shipping, and so on? That comes off the amount that I actually make for the sales. So say I purchase product for $10 and I sell it for $20, then my cost of goods sold would be 50%. And sometimes, depending on the business that you're in, you can kind of figure that out. Say, okay, I know my cost of goods sold is 50%, or the other term is like gross margin. You can see there is 100 or is 50%. So you would put that number in the yellow box. But if you're not sure, like I said, again, it is a projected amount. So you're obviously not going to really know if you have like bad debts or depreciation, things like that. We don't really necessarily need for you to fill in those boxes unless you, like I say, have an existing business and you know what it is every month, then yeah, certainly. Please feel free to put those in there and it makes it a little bit more realistic. So the final financial spreadsheet is going to be creating a balance sheet. And this is kind of a little bit tricky when it's just projected. It's a brand new project or a brand new business. But obviously, once you've done your financial projections, you're going to see like what sort of assets that you say you're going to need to buy. You kind of know what you've asked for inventory and property and equipment, that kind of thing. You know what your loan is going to be from AWE or from other organizations, sort of how much money that you've put into the business yourself, which would be considered the owner's equity. So we're going to organize all this, and we'll go through the spreadsheet and show you how it is. And then the reason it's called a balance sheet is that your assets should equal your liabilities and your equity. So your assets equal what you purchase, like your liabilities, your loans, and so on, because you purchase some of your assets with your loans, and plus the money that you've put in yourself, the equity. So here's the balance sheet. Again, some of these numbers pull through from previous spreadsheets. You can see under the assets, we're showing the cash in the bank account. Remember, we opened with 14.4 in our bank account, and then we ended year one at 17.6, and so on. The prepaid expenses that we have in there is for that damage deposit, or that last month's rent, that will carry through as long as the business is still in that space. And then our inventory, we showed at the beginning, we want to purchase around 10,000 in inventory. And while during the year, we're going to buy a little, sell a little, buy a little, we're going to still want to keep it always around $10,000. I think I didn't mention though with the balance sheet, whereas the income statement is showing you a period of time, like a month or a year or whatever, the balance sheet is just a snapshot in time. So this is just, if I looked at today what I owed and what I owned, this is what would be what my balance sheet is. In this case, we want to look at the end of the year, what I owe and what I owned, but that's kind of basically what the balance sheet is reflecting. In the fixed assets, so those are things, current assets are things that you would maybe use up within the year. Fixed assets are what you have over the long term. So in here, we're showing that we purchased that signage, remember, from the very beginning, and that we purchased equipment and office and furniture. And then we also had that leasehold improvement amount that's going to be kind of depreciated over time, but there it is in the fixed assets. In the liabilities, it's the same thing. Current liabilities is what we are looking at. What are we owing in the current year, at the end of the current year, and then what we owe in the long run. So in this particular case, the owner put in the 38,400 that we saw from the very first page. So that's her shareholders loan into the corporation. The company's going to eventually pay her back over time. She's asked for 105 loan from AWE. So her long-term liabilities to herself and to AWE will be the 143, right? Um, but currently in the opening position, she doesn't owe any money to anything because it's just like before the business even starts. At the end of year one, she's going to have owed the organization 1 year's worth of the loan. Now, the reason we've shown the 10,500 and not the 21,000. So think of this as, okay, she's taken a $105,000 loan. It's going to be paid over 5 years. So it's 105 divided by 5, right? Which would be 21,000 a year, which you can see in year two. But in year one, AIWE has a program where if it is a new business and you do need some time to get some sales going, we can give you an interest-only period of about 6 months where you only pay interest, and so that you're not actually paying back principal in those first 6 months. Then you end up paying off your loan over 4.5 years instead of 5, so your payments are a little higher. But here we've just reflected that and saying in the first year she's only going to owe a half a year on the loan because she decided to take that 6 months interest only period. And then you can see how the 105 will be reduced by that 10.5 at the end of year one, and now she only owes 94.5 on the loan. And the same in year two, after she pays for a second year, she'll only owe the 73.5. The shareholder loan goes up and down based on if there's profits or losses within the organization that can go in and out of that shareholder's loan. And the retained earnings is basically just what your profit was. So whatever your profit was at the end of each year, which we showed on that previous profit and loss statement or income statement as it's called, that just goes right in here as what the retained earnings are for year one, and the retained earnings for year two is the profit carried forward from the other spreadsheet. And like I say, the formulas are magical. They will do that for you. But I just want you to understand kind of what we're looking at. So you're like, oh my gosh, I have no idea what we're looking at here. So I hope that helps explain. If obviously, if you do your best and try to really work through everything and you're stuck on a little something, we've already had a chat. Definitely available to answer questions during the process, and I can kind of help you like sort of fill in any blanks that you might have. So that is kind of the end of the financial projections, and we'll definitely be available to take some questions here in a moment. If you do need resources, we definitely have a lot of them on checklists and guides and so on our website. So feel free to check those out. When you do apply for funding, you will need to either update your existing business plan or create a new one. If you've never done a business plan, I often advise people to check out the business plan template at businesslink.ca. They're a startup organization that helps a lot, it has a lot of educating and entrepreneur support in the startup space, but they also do have an amazing sort of interactive business plan that really makes, putting your business plan together a lot easier. So I think the next step we decided to do is we're going to walk through the actual loan application online. Now we call it the pre-application because when you're ready to go, you would go to our website and fill this all out, upload all the stuff that you have, and then we'll take a look at it, meet with you, and then when you're ready to move to the next step, we'll go on to the more of the formal application where we're asking for a lot more of your personal documents and things like that. So I'm just going to share my screen here with you, and we can kind of walk through and take a look at this. This is really super new. Can you see my screen okay there? Okay. All right. So I'm assuming, Amanda, if you can't see it, you'll let me know. But this is our website. Like I mentioned, everything to do with Alberta Women Entrepreneurs is available here. But the one we're looking at today is going to be the funding section. So the loans part is definitely just an overview of what we talked about today, what's covered, what's not, the kind of the terms and what you'll need. The grants page is for some things that or some grants with links that you can take a look at. If you want to just request some loan information, you can go to this, and we have a prepared email that we can send you. But the one that we're going to look at today is called Are You Ready for Financing? So we're just going to click on that there. And this is actually a very kind of detailed questionnaire, and it's sort of the first part of that application if you want to go ahead. And this goes directly into our system, into our CRM. So it really helps us out too to make sure we have all your information correct going forward. So we just want to know a little bit about your business. You will have to have, your documentation ready that we just talked about today, your financial projections and your business plan, like we here. And then if you're an existing business, we do need your current financial statements, so the ones that your accountant prepares for you at the end of the year. Now, obviously, we're going to ask a few qualifying questions like, is it women-led? What percentage? It really helps us to know what region of Alberta that you live in. It's pretty important. We need to know that all the shareholders reside in Alberta because that's one of the conditions of the loan. And like we mentioned earlier, that that you're all and or citizens. Now, here we're going through what we went through on just saying these are the things that we cannot use it for. So can you confirm that you didn't want to use it for anything like that? Um, do all the shareholders have a credit score over 650? So that is just, that is one of our requirements, and it's actually kind of reasonable. If you were going to BDC or Futurepreneur or others, they would require a 675 or 700 credit score. But yeah, 650 is kind of our guideline for that. Obviously, it's important to know that you don't have any active collections or are going through a bankruptcy. So these are all things that'll just save you energy if you know that you don't have any of these things, or that you do, that you won't bother filling out the rest of the application because you know that you're not quite in a position to do that yet. And they ask things like, would you be able to provide a minimum of 30% security and 25% equity contribution? So remember on our example, we talked about how she put some money in. That's what they were kind of looking at. Do you have 25% of the total project cost to put in yourself? And the security is like collateral. So say we're going to go and buy a bunch of equipment for your business or things like that. Maybe sometimes we can go to look at personal security, but just, yeah, it's like if for some reason the loan default, if you had to default on your loan or the business closes or whatever, can you afford to sell it and pay us back? Or can you, or is that something that like we could come to you and sort of try to regain the loan funds from? We ask a little bit about how much funding you require and what you would like to use it for. And again, we're talking about what we say, what we can fund, right? So there's equipment, inventory, technology, employee salaries, and that sort of thing. So here's where you would upload your business plan. Um, we would like to know, obviously, if you're a home-based business or bricks and mortar, what's the scope of your business? Are you local or national or international? And so then we're asking some specific questions here about your business. And if your business plan is complete, you can sort of even just cut and paste the information into the boxes here. And if you don't necessarily have that in your business plan, then it's kind of a clue to you that maybe that would be a good thing to include. We talk about where you're located, what the goals and visions are for your business. Have you researched the industry that you're getting into or moving into? And have you thought about what your sort of risks are in the business? That's really important. I don't know if you've ever heard of a SWOT analysis. There's lots of information on how to do a SWOT analysis online, but you know that's really good in a business plan if you can do that. Describe your target market. Tell us if you've gone out there and done any market research of any kind. What are your plans for hiring or staffing? If it's just going to be just you in the beginning, or maybe in year two, you're going to hire somebody. Perhaps you're going to just bring on consultants where you need them. Just a bit of an explanation there on how that's going to work. And, we like to know how you're going to use technology to run the business. Once your business gets going really well and you're up and running, we actually have programs such as Bold Leadership that really can help you learn about how to, use technology and get into that digital space to enhance your business. But again, we've got all that information online if you want to check out that programming for the future. Why is your company different? What is your unique value proposition? What makes you different than your competitors? And yeah, I mean, obviously, we are not an organization that funds just 100% based on the numbers. We want to know your background and your story. And that's really important. Like if you have a lot of experience in the industry, maybe you've been in this industry as an employee for years and now you want to strike out on your own. This type of thing. What is your background and what is your story? And that adds that personal touch that we definitely consider when we're looking at financing. So then we get into our financial information. So really what we're doing, we're going to upload that financial projection spreadsheet that we just walked through. And we do want to know where you're at in your business. So are you a startup? Have you been, are you buying an existing business? Kind of where are you at in your business journey? So here, what we're asking for is for those numbers that we pulled together in those spreadsheets. So what did we have as our total revenue or sales? What was your cost of goods sold and your expenses? Like we just walked through on that um, that income or on that income statement and balance sheet there. Um, and then Well, actually, that previous page was for your actuals if you're an existing business. Sorry about that. I'm kind of new to this is a brand new application. That is your actual if you're currently in business, and then projected revenue and projected expenses will be what you're projecting out for the next 2 years. And those are just all pulled from the work that you did previously. Here we're asking for a little bit of personal information about you so we can get you started on that. And, your mailing address, your contact information. It's very helpful to know what the legal name of the business is and what is your business start date or your planned start date, if you know what that is. And then your business type. So are you B2B, business to business, business to consumer, social enterprise, a tech, or other? Then again, what is your legal structure? Are you incorporated or are you a sole proprietorship? If incorporated, what's the incorporation date? Some industry sector information there, and just your own personal description of your business. And then what are your challenges? So, maybe you've said that you're requesting funding to get some marketing done or to do some growth or scaling in your business. It's helpful for us to know, what those challenges are and how we can help. And then this is just some demographic information for us. It's not mandatory, as you can see, but if you feel comfortable and you want to, speak to any of these, if you identify with being any of these things, obviously a new Canadian or immigrant, it will be at this point, you will have sort of we know that you're a permanent resident already, but or maybe a Canadian citizen, but maybe you'd like to identify that you are new to Canada. And then there's the option to identify as Francophone. There are definitely a lot of resources in the entrepreneur support space for Francophone entrepreneurs. Just a little question, how do you hear about us? And then submit. And that will get you rolling. I'll see that you've filled out the application in our system and then reach out to you to kind of set up a phone call and we can kind of get the ball rolling from there.